Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about why I am buying Roblox stock. Ticker symbol RBLX. Now, this company had their IPO a couple months ago, and it's always good not to hop into it right at the IPO date, right? You can either make a ton of money or you can lose a ton of money. And you can see in the first day we had just these massive spikes, right? This thing IPO'd, spiked all the way up to $90, sold off back down to about 73, sold off more down to 69, back up. So you can see anytime there is an IPO, it's always a little volatile and a little risky. And yes, I do think IPO investing's fun, but it's also extremely risky and you can make money, but most of the time, guys, you will end up losing money. Super common to see it, right? We had Coinbase's IPO. You can see super volatile right in the beginning, sold off like crazy. So for me, this one definitely is one that I felt like carries a lot of potential because Roblox is more than an online game. It's almost like a community of people that are really devoted, and the company makes a ton of money. They have pretty solid fundamentals, and it's just, in my opinion, a solid growth stock. Now, if we actually break down some of the financials, we're on Yahoo Finance, and you can see a lot of analysts think it's right at about a 2, so it's a pretty solid buy. And if we actually continue and we look at the financials right here, you can see the overall revenue here is off the charts, but they did miss, some of their earnings here. But it's super common for a company to miss earnings. It makes it a little risky because you always want a company that actually hits their earnings and beats it, because then it's just more people getting into it. The company's doing better and it's blowing analysts, out of the water, which is really promising. Breaking down some of the numbers here, you can see the 52-week range is $60.50 all the way up to $103. That was the all-time highs here. The average volume is about 7 million shares traded, which is quite a bit. And then the year one analyst target is $89, which is perfect. So a lot of people always think there's a lot of risk involved, and especially with a company like this, there definitely is. And if we look at the financials, you can see here the total revenue is pretty solid. We have a lot of increases. The only thing that is really lacking about this company is the profit, right? They're not profitable, and it's super common to see companies that aren't profitable, but you want to make sure that they're building on that. And that's one thing that Roblox is doing, which is really promising to see. So this, at the end of the day, is a little bit concerning, but as long as you have these better numbers on the revenue, increasing profit margin, all that stuff, then this will come with time. So breaking down some of the chart here, you can see it does have this resistance at $88 a share. Very strong support stepping in at 63 to 70. So right in that zone, this represents a very strong indication to buy in. And you can see, looking at the chart, it's very volatile, right? We have a ton of spike ups, ton of sell-offs, ton of spike ups, sell-off, spike up, down, all the way down to $70, back up to $85, back down to $78. So what I'm doing is I'm going to be dollar cost averaging this one. Now, I'm not going heavily invested in. I'm going about 5% of my portfolio. So what that means is for every $100 I have invested, I'm going to be putting about $5 towards Roblox. Now, the reason why I do this is because it virtually, when you dollar cost average, it almost eliminates the risk, just because if your mindset, like mine is like a 2 to 5 year outlook for Roblox, I think that it's worth having shares, even if they go to $50, it's only 5% of my portfolio right now. So growing it is not going to be super large. And not to mention, guys, this one, we have this increasing revenue. Dollar cost averaging is going to virtually eliminate the risk because you're going to be averaging your shares. So if the stock goes up, you're averaging your shares in, and you're making money because the stock value is going up. But the beauty of it is when it falls down, just like it's done in the past, you average down your shares. So when the stock recovers, or we have these pop-ups, just like in here and here and here, you make a lot more money because your average shares are so much lower. And you don't have to worry about getting in overvalued or undervalued. You're virtually just getting into the company. You're getting a good average share price. So here's an example. If you wanted to invest $1,000 into Roblox and you don't want to try to time it, right? I think getting in under $70 would be very, very crucial. That's a major support. But dollar cost averaging, you want to invest $1,000 instead of putting up that $1,000 all up front. You're investing maybe $100 a week or $100 a month over the next 10 weeks, 10 months. So you're still investing, that $1,000, but you get a good average share price for that time period. And it's a beautiful way to invest and virtually eliminate the risk with a lot of these growth stocks. And for me, anytime the stock falls more than 6% in value, I double what I normally put in. So if it falls down below 70, this is when I'm going to be doubling what I normally put in, because I know historically we have seen a lot of buying pressure near and around that zone. Not to mention, guys, this is just a stable company. It's super fun to invest in a company that I've used growing up. I used to play Roblox all the time, so maybe I'm a little biased against it, but I definitely think this is a fun one to have in your portfolio. The fundamentals could be a little better, yes. Technicals, anything under 70, major buy on a support. So guys, that is it. I hope you guys enjoyed it. If you did, hit that like button, subscribe to the channel, and we will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.